A frantic buying spree on Wall Street Monday on hopes the coronavirus outbreak could soon level off. The S&P 500 rising nearly 6% Monday afternoon. Well, has the market reached a bottom? Well, let's ask Greg Powell. He's CEO of FiPlan Partners in Birmingham, Alabama. He joins us now via Skype. Well, happy Monday to you, Greg.
Thank you, Fred. It's great to be here.
Good to see you again. Now, the president had expressed hope that the virus was leveling off in hot spots. Right now, we've got the Dow rising nearly 1,200 points.
Yes.
Is this huge bounce back today premature? I mean, the president did also say that this week would be the toughest week.
No, you're absolutely correct. I think it's premature. It's great to see the market react so positively to positive news. At the same time, though, we still have a lot to go through over the next 2 weeks. And it's not just the hot spots, but throughout the country. And so, on these strong rallies like this may be a time if people are selling on the upside and buying on the dips, they may want to think about that, especially with such a short week.
When you say they may want to think about that, do you think that stocks possibly may have bottomed on March 23rd, or are stocks headed lower? You seem to be indicating that perhaps stocks could go lower from here.
That's a great question. Let me say this. No one really knows where the bottom is. I've seen from a technical analysis, 2,000 on the S&P 500, 2,200, 2,344. The point I would make is that you need a long-term strategy. And with that long-term strategy, to be looking for those individual equities or ETFs, funds, that you would say to yourself, I would buy this for the long term. They're financially sound and possibly even making money in this kind of market and economic environment.
Do you get the sense, you've been a veteran market watcher over all these years through the 9/11, 2008, the financial crisis and all, Black Monday. To what extent do you think our stocks headed lower? You did mention some of the technical levels.
Well, one thing that I do know, I have been doing this 30 plus years. So I got in the industry in 1981-82. So Iran hostage crisis, banks were closing, double-digit interest rates, mortgages at 19%. And throughout the history of my career, what I've seen when we have these kind of economic scenarios, and this is a nasty one, is that when the market does find that bottom, is to understand that if you're using a long-term approach and buying into quality companies or ETFs, what you realize is the market has always gone higher after that. There's no guarantee there, but the point I want to make is from 81, then I got to participate in 1987 stock market crash, which at the time was historic. Here we are now at these levels. I've been through the different crisis situations, and if you're being very prudent, looking for quality, long term, that's a great philosophy to have in this market.
And Greg, looking at today's market action, what specifically makes you think that this rally, this bounce back may be a bit premature? I do see that defensives are leading this rally.
Well, we still have a lot of data that needs to come in. We've still got to address the whole earnings situation. People have already come to the conclusion earnings are not going to be good. Unemployment could very well be higher. But then the coronavirus as well could hit us in a way that we haven't thought about. Simultaneously, though, that's the beauty of this country and the market's innovation. Innovation at any time we could have a new discovery in a drug, a new prospect on vaccinations. I think also the reason the market's positive today, we're seeing the masks for healthcare workers show up. The ventilators are starting to come about. It was Churchill that said Americans, will do always their very best, but they will utilize every option until they have to choose the right option. I don't think I quoted that verbatim, but the point I'm making is, as Americans, when our back's against the wall, innovation comes out, and we've got a lot of that going on right now.
All right, let's hope so. Thanks a lot, Greg, for sharing your views with us.
Absolutely. Thank you.
Our thanks to Greg Powell, CEO at FiPlan Partners out in Birmingham, Alabama. I'm Fred Katayama, and this is Reuters.